The dollar pulling back again today following a huge run-up this year. And our next guest says an even bigger drop in the greenback could usher in the return of the bull. Joining me here at Post 9 is Julian Emanuel, Senior Managing Director at Evercore ISI. Julian, good to see you.
Great to be here, Mike.
The dollar obviously had been a big source of pressure on, I guess, on risk assets, holding the market in check a little bit. We've eased back. I think today the U.S. dollar index may be even below the July highs. Is that a decisive move? How does that play into the rest of financial assets?
Well, it's a change in psychology. If you look at how the markets recovered off the June low, basically you saw the break in gasoline prices. Then you saw credit spreads start to moderate. And obviously, we've had a lot of concern about China, about Europe, clearly, and still appropriately so. But now the move in the dollar is saying perhaps that's easing slightly. But more importantly, because the Fed, we can have line of sight to the Fed eventually going on pause, likely by year end. Big plus for assets.
So that, in a sense, depicts peak Fed hawkishness. That's the hope, right? What are the investment implications right now in terms of, U.S. stocks, rest of the world, and I guess economic growth?
So, again, economic growth is something that's likely to be challenged for months to come, perhaps quarters to come. We still don't see a recession here over the next year or so, but slower growth abroad, obviously. However, when you think about it, given the fact that the dollar, having been a source of stress as it's been, is likely going to help international stocks, particularly emerging markets, which have been sort of everyone's favorite underweight. And we sort of think of it the way we thought about energy 6-9 months ago, then everyone's favorite underweight. Things change.
It's an interesting idea because the underperformance has been very pronounced in emerging markets. On the other hand, so much of it is China. It's hard to know exactly what the overall kind of regional play has been. Do you think we could escape a Fed tightening cycle without things kind of somehow mishaps in emerging markets or anything like that?
Look, there is likely to be some sort of mishap. But when you think about valuations of the rest of the world and you think about the strength of the financial system in the U.S., I think you could argue, and I think your last guest talked about this, in years like 1994, we had similar mishaps,
right,
but we were able to get through it. We think that's highly possible this time.
And then in terms of, the U.S. market and how it's positioned, I mean, if you don't think there's a recession right, ahead of us here, and we have line of sight perhaps toward the Fed being done for a while, what does that mean for is the June low something that's going to stick? Do we even have to go back to it?
Again, it does depend on the evolution of the economic data. And I think part of the thing that we've seen this year is that even though we didn't have a recession, there were times when it felt like there was a recession in financial assets. So we don't want to say that the June low was THE low. We suspect it was, but we do need to see how things move along. And does the Fed fully understand that inflation and expectations are coming down enough to take the foot off the gas pedal?
Yeah, and just, I guess, finally, in terms of, equity market valuation, I mean, that's the other side you see. It's like, fine, June low, maybe it's got a chance of being a real consequential one. But, we're at 17 times earnings. Our earnings have to come down a little bit. The noisy backdrop from there.
Right. It is not cheap at all, certainly not by historical standards of the last 50 years, which I think when you look at geopolitics, tells us that we need to reconsider what the valuation regime is, particularly since when you look at the bond market, and to us, yields do look higher in the months and years ahead.
All right, but we do have cheaper values overseas, as you mentioned. We'll see if that ends up working. Thanks a lot, Julian. Appreciate it.
Thank you.